Hey guys, Mike here. So another interesting day in the market, and we'll definitely go through some charts for sure. I'm going to show you what I'm looking at on those. Obviously, we had another Mag 7 report. Amazon dropped after earnings, which seems to be the norm. I'll show you a chart which shows you, these Mag 7s and what they're doing after the report, and then what they're doing, of course, the days preceding the earnings and stuff. And boy, it's the guidance, right? The market is not liking what it's hearing on these guidance, and so that is one reason why you're seeing the S&P is creeping up. But to be setting 1% away from all-time highs, there's a lot of things that aren't adding up on this, and we're going to talk about that, and I'll show you what I'm talking about with this. And put your question for Saturday's video in there, but I am going to spend some time on, I know a lot of people are asking me about this wealth fund, sovereign wealth fund, whatever it's called, trade war, all this different stuff, and I'm going to spend a little more time on that in Saturday's video. I don't want to take up too much time in this video on that, and so we'll dedicate some to that. And and it was nice to see NVDa and Tesla finally wake up. Obviously, one came down to a certain level we talked about, so we'll talk about that one. And here's what's not adding up and what's creating a lot of different stuff right here. So look, here it is. You got this one right here. It's called the U.S. Categorical Economic Policy Uncertainty Indicator, or whatever they want to call it. But when you go back 20 years, you can see the uncertainty. What's the market not like? It doesn't like uncertainty, right? And you can see where it's at now. Obviously, it was higher before when you go back to President Trump's first time in. And so when he's in, it creates a lot of uncertainty, okay? You can see any other time. And I'm going to talk about this a little bit more in Saturday's video, but I want you to see this part, right? That's going to create volatility. There's no doubt about that, okay? We're seeing it every single day. The stock market's still marching up. We just got to see if we're going to finally get to all-time highs, break through all-time highs. We'll talk about it in a minute. But you're seeing that in the sentiment indicators, right? Like the AAII Bears sentiment indicator. And you can see, I believe this is only the fourth time or whatever in history or something like that, this area, to where you're getting this like 43% now. So it keeps going up, even though we're sitting here 1% away from all-time highs. And this is the deal. When you're 1% away from all-time highs, we've only got this 4 times where we've at least been 40% or higher on this indicator. You can see the other dates, May 9th, May 30th, 2007 right there. You see what happened afterwards. The other one's April 10th, 2013. You see what the market did after that. Other one's August 12th, or 2 of them in 2020 in the same week right here. And you kind of see what happens there. Even though I think we did pull down in August and then took back off after that. And so you see where we're at now, literally 1% away from all-time highs. And so, you would think if you're 1% away from all-time highs, what normally do you see? You normally see the fear and greed indexes like extreme greed, or at least greed, that's for sure. And then you don't see, and you see this right here, not bearish, you see it super, super bullish. That's usually what you see pushing through this, whether people call it blow off tops or whatever you want to call it. But that was normally what you're going to see, breath through the roof, and all this fun stuff. But when you look at like the most popular fear and greed index, you see it's still in fear. The other one I use is barely in greed. Right, but the reason why is because what's going on when it comes to the bond market and all this other stuff. This is the stock price strength, that's in extreme fear. Stock price breadth, that's in fear. But the put call ratio, look at this thing. It was lower, less than like 2 weeks ago. But for this to be this low, that means your denominator, your calls, have to be higher than the numerator, which is the put, right? And so normally when you see it this low, you will start to get a pullback. That's normally what happens because there's too much greed in the market, but your other indicators aren't adding up to greed, which is kind of funny. But I implore you to go through this because like that July bottom over there to the rise, that was a nice pullback. And then you go over here and you can see what's happening. You got your Magnificent 7 earnings, right? The reactions. First, you get 2.9% on Tesla when it reports. Microsoft -6, Meta's 1.6, Apple basically flat, Google -8.9, and then you see performance since their earnings. Google just reported 9% down. Apple -3.9, Microsoft's -7.1, Tesla -2, and then you got Meta, which is the only one that's bucked this trend so far. And then we go into this chart. What's helping hold the market up? Once again, stop buybacks. We know they do this like crazy, and right now, year-to-date buybacks as a percentage of the S&P 500 market cap were higher than any other January on record. Does this surprise anybody? No, we've already showed you how much Apple buys back. I mean, that's what these companies do because they realize, look, when they can't produce the growth that the market's expecting, what do? Buy back shares. That's exactly what you do. It's worked for Apple for a long time. Others are following trend. Same way you got these miners and everybody else trying to follow Mr., right? So people will buy their stock and everything by just buying Bitcoin, borrowing money to buy Bitcoin, all that stuff. people have started following the Apple way and say, let's start doing buybacks. Sounds great. Even smaller companies you wouldn't think they actually would do it. And that's what they're doing. And so I know, trust me, this is a very weird market to see. Just nothing's aligned. Normally, back in 2022, we were coming up through 2021, you could see it. The fear and greed indexes were through the roof. The breadth was through the roof, put call ratios in the toilet because there's so many people in calls. Forget about it. No fear in the market. AI sentiment was up there, and then boom, we went over. And now you're just seeing everything kind of out of whack. The put call ratio looks like people are just like, whatever. We don't need puts. We're just going to calls. But then your other sentiment and your breadth indicators are like, not really seeing this kind of blow off top type of, sentiment to say the least. But and that's why it's being 1% away from all-time highs and where everything's kind of lining up and seeing what the Mag 7 is doing right now, or Mag 8 that is. Every one of them besides Meta have really just been punished since earnings and for the earnings and really for the guidance. And if the guidance is low now, right, the market's pushed them down because now I realize, okay, if the guidance is slow now, if these rates stay up here, right, and the 5-year doesn't take that dump, right, and it stays up high, like what does that do for guidance then going into the third and fourth quarter and stuff, right? So, that's why we keep such a close eye on that, and we'll talk about that in just a minute. But, you look at SPY here, and again, we gapped up today and then just went sideways, basically doing nothing for the longest time, by the way. And we were in gamma, positive gamma territory, which is good and everything, held this trend line, got its bounce. The last, couple hours, what were really volatile, right? We got this big drop down, then a big pop up, then another drop down. And so, Amazon reports, and we're down in after hours. So I'd expect the futures, to sit there and maybe draw down. But again, we had some, Mag 7s wake up, which was Tesla and NVDa and stuff like that. So that was a good thing. And what I'm looking here at is to see if we can get some kind of drawdown right here. It's not a big one into this 4-hour fair value gap, get a discount before trying to march up and see if the market is trying to go to all-time new highs or even that trend line for that matter. But you can see right in that 4-hour fair value gap, you got your 0.5 fib, your golden pocket, and right below that is the 0.79 fib. And that would be a nice one just before trying to bounce higher. And so, we'll see, because so far it's been pretty structured, right? Higher lows, higher highs. And so it would be nice to get a dip down in there before trying to push back up here. And I'm not saying we're going all-time highs, but this market, right? And there is that trend line right above. We got to get through that first. So you can definitely see a rejection off that if we decide to gap up tomorrow and move up higher at the open and stuff. But, another reason is you got this dark pool level, which was a big dark pool level at 606.55. And where I got those one from was from QuantData. I know I'm not an affiliate with them or anything like that, but you can see right there, it originated on December 6, 2024, with over $2.5 billion in notional value. And when I go back and look at this, going back to December on December 6th right here, and it's usually just an area, right? I think we were 8 cents short of it today. You can see that's where it was, right? And we kept coming up rejecting, and then we took a big dump over. I'm not saying that's going to happen. I'm just saying for a shorter term pullback, because everything's kind of coming into some resistance here. That's another reason I'm kind of doing that. And we'll see. But again, you got the Qs, never set a new all-time high, sitting right there at that freaking trend line. And so, we'll see if we push up, hit it, maybe come back down. It's not a big drop at all to come back down in there before seeing if this market wants to push up and actually break that. Because, I think if we break the trend line, I think we all would agree we're going to new all-time highs. It's right there, right? Unless something gets tweeted out or some message comes out of the White House about something in tariffs, that's a whole different ball game. I get that. And so I'm going to mark those out just for the heck of it. So somewhere between 520, 523, somewhere in there, to see if we can get a pullback down there. Because remember, this one right here is just wedging, right? This is different than SPY. This is set higher lows, unlike the SPY, and just lower highs. So this is wedging right here. So we're going to mark that out right there. And then coming over to IWM, once again, I thought we're breaking through the 230, 231 area right there and rejected again. And it's more of an area. It's not an exact line, right? So we're going to mark this out as an area. I'll do a better job of doing that instead of some people think it's like just a line you go into, and you got to reject that specific price of the penny. And that's not the way it works. And so again, that's 1, 2, 3, like 4 big ones there. And so we're going to see if we stay in this range of between 226.97 and 230.14, somewhere in that area. And so we'll see if that's what's going to be the case again. And when it comes out of it, it's simple, right? It was doing good, right? Came up, got rejected. again, 10 years starts to kind of show life once again. We had data come out today, and it was by the way, the jobs data came out, and it was just basically as it is, no big deal, not too far under, not too far over type of stuff. So we got bigger data coming out tomorrow, which is what's going to affect the 10-year yield. We'll talk about at the end of this video. And again, it got a little pop today. You needed that, but the truth is it should have got a pop, right? Because if we come down here and look, and I'll pull one of these lines down for you, you can see right there where it's been resistance support in the past right there. That's where it just got a pop at. And another reason is pull the TLT chart up and you'll see what TLT do. It came into resistance, okay? So it comes down, 10-year goes up. Again, you can chart both these. And so when we get the news tomorrow, it's going to be important jobs data, unemployment rate, and all that good stuff. Then if this drops, IWM is going to head back up to that 230.15 area again. We'll see if it breaks through. And I told you it wasn't going to be long for the stuff started to come out, right? It came out today. Mortgage rates dropped slightly, but remain near 7%. So as the 10-year drops, mortgage rates, other lending rates will come down. That's actually good for the economy, by the way, and good for companies. Now, NVDa, showing a little more life today, ended up getting close to wanting to try to go back into that gap. Didn't quite get there. So 129.20, I believe. With that break, going back into the gap. And you know what happens when stock gets in the gap? Usually they can fly. Mark out the 50% mark on this thing, though. Sometimes you'll see it go 50%, which I believe is 135.40 or something like that on this one. So just mark that out. Tesla, again, we talked about an area. Will come down in. And again, did it get to the penny? No, it got right down that area and then bounced. And of course, I love this anchor VWAP and this gap down this morning. Tested it multiple times, rejected it, and then tested the support and took off. And all these took off like in the last 30, 40 minutes of the day. I mean, just rocketed up. And so this one's got a gap as well. It can enter right there. And, we know, surprisingly, both of them did pretty decent together. I don't really see too much going on with the options market. Maybe at the end of the day it was happening, but I was putting a shed together, so I couldn't tell you. But again, it's another one of those. It's an area, not an exact line, right? And when you look at this, I mean, obviously it got 0.69% away from the 0.79 fib, so less than a percent. And this area is the key. This was the earnings down. Remember this right here? So right below that's liquidity, right? So what did it do? It came down this morning and it swept it. And as soon as it swept it, that's when it went back up, okay? So when you get these big, suck up, suck down candles and stuff, mark them out, because if you see it dip right below and all of a sudden you see it start to take off, you're like, what just happened? It just took some liquidity and it was gone. It came down close enough to that area. Is this the actual bottom? Will it be? That's what we got to find out. We'll see how the market reacts to this news tomorrow. We'll see if NVIDIA is going. Can Tesla go with it? That's what we talked about, the two different ways to go, right? Are we heading back up to that descending trend line? Or we're going to head back down that area and see if we can hold that area. That's really the key. And when you look at it, that's what happened down here. Remember back there, we thought it was going to hit the 50, and it literally didn't hit the 50, like maybe 1.5% or something, and it just took off like that. So we'll mark this area out. If we do come back down to it to revisit, again, that should hold unless it's some kind of news-related event. But again, if it moves back up, let's see if we get between 384, 388 right in there. There is a daily fair value gap right there to be mitigated on this one, and that's not even a big move. It's like 3%, and that's nothing for Tesla. And then right above that is another gap. Now, Google, this is what I'm talking about when I say area. Actually, I don't know if we're getting down there, because it did have, to me, it was overreaction on the earnings, but this is the area I'm talking about. So I give you an area. So this area right here, anywhere from 175, 184, I believe it is, would give you a nice discount right in there if it does come down there. Right now, 191.63 seems to be holding as resistance. And so if this starts to move back down, then hey, there we go. That's the area I've been looking to buy, but I'm not interested unless it comes back down there. Now, Palantir doing Palantir things up here. It's holding this 100 fib, bounced again. Big day for it, starting right out of the gates and stuff. And I'm going to draw some trend line here just to see, because this actually, when I look at this chart, where is a possible spot where this thing will actually maybe hit a rejection? And you can see right there, that trend line will line up with that fib right there, and then we'll draw another one here. It's almost like a channel, and we'll see if it starts kind of bouncing back and forth. But at that next fib, which I believe is like 114 if I'm not mistaken, we'll see if we finally hit some resistance there. But you can see right here, it's the options market. Like I never got any alerts on Palantir before until that last earnings. And you can see 64 million in bullish calls hitting the flow compared to 32 million in bearish put. And you can see right there, all that stuff coming in the morning just drove it up, and then it went sideways basically the rest of the day. but that's what was making this just surge. And so now as the options market just driving it up as well. So somebody said, hey, this is a new NVIDIA or Tesla. Right now, you can't argue with that, right? It seems to be doing that, and it seems to be moving off the options market. So next here, Affirm. I told you guys it was starting to break out, had earnings coming up. They just reported earnings and mooned up here. It's around $71, I believe it was. Starting to suck back down. So again, we'll see if this is going to hold. Like I said, the last two earnings, this thing has been a rocket ship so far, and that seems to be the case. 18% pop, not too shabby right there. So congrats whoever was in Affirm right there, and it's finally one of the few fintech stocks that reported earnings that actually did well. So remember, SoFi sold off, Palantir sold off. I don't remember Square even reporting, but if they did, let me know what happened, because I sure can't remember. But with this one, we'll just draw a trend line, see as we come down, as they get on the call and stuff. Do we hold this trend line, or do we hold this area right here at 67.68? So let's see if we can hold either one of those if it decides to come down once it settles in. Now, I did say we have big data tomorrow, so we have our average hourly earnings. The big one's non-farm employment change, unemployment rate, preliminary, Universal Consumer Sentiment, and inflation expectations. So buckle up for that. It's always a fun one, and it's Friday, so yay! So anyway, hope you guys got something out of it. Hit the like and subscribe button if you did. Please think I'll sign up for the membership. Less than McDonald's combo, and everything you get with it. And I'll see you guys on Saturday to answer your questions. Have a good one, guys.